Hey there, it's Mike Langford. Welcome to another episode of the Augmented Advisor Podcast, brought to you by Blue Leaf. On this episode of the show, John Prendergast and I are joined by Runik, Mehrotra, and Samir Vasavada, the co-founders of Vise, a technology-powered investment manager that provides financial advisors with customized and intelligent investment solutions to help their clients achieve their goals. We invited Runik and Samir on the show to talk about a couple of things that are likely to reshape the wealth management industry in the coming years. First, the demographics of your prime target financial consumers are changing. Financial advisors who are looking to grow their business in the decades to come need to be focusing on attracting and serving Millennials and Gen Z. And that means understanding what makes them tick. Luckily, Runik and Samir have some fantastic insights on this. They did a whole big survey, so you're going to love this episode for that. And just as important, we wanted to hear about how the team at Vise is leveraging artificial intelligence and machine learning to create and manage custom portfolios for the clients of financial advisors. Oh, and how should financial advisors go about explaining all this stuff to clients? This is going to be a fantastic episode. You're absolutely going to love it. Before we get started, please take a moment to subscribe to the podcast on Apple Podcasts, Spotify, Google, Amazon, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a topic or a guest for the show, hit us up, podcast@blueleaf.com, or swing by blueleaf.com and use the contact form there. Or John, myself, Blue Leaf, we're all really easy to find on the socials. Hit us up there. We'd love to hear from you. Okay, let's get to our conversation with Runik and Samir. And we're good.
We are good.
We are fantastic. We're all ready. And we're excited. We were just talking about NBA trade deadline and how we can't wait. At least Runik and I can't wait. So we're really excited about this. So Runik, Samir, welcome to the Augmented Advisor Podcast. Great to see you gents finally in person.
Yes, thank you so much for having us. Great to see your face.
Great to see your faces as well. So I've been looking forward to this podcast for a very long time because I've known John for well over a decade now. And we've been doing this podcast now for 6 months or so. And we're just thrilled. I've been telling him, I want to get Runik and Samir on the pod. And so I was just like, let's do this. Let's get you guys on. So John, finally get to introduce.
It's exciting.
It is exciting.
It's exciting because, you know, Mike, I get to express my inner geek. I mean, we're going to be talking about AI and machine learning and how it applies to the market and advisors. And, you know, that's fantastic stuff, right?
It is. It's really, really cool. So, you know, before we dive into how Vise works and artificial intelligence and machine learning and what kind of impact that can have for financial advisors and by extension, obviously, their clients, I wanted to dive into some interesting stuff that you and the Vise team did. You conducted a survey last year of 3,000 US adults. And while the respondents spanned the entire adult age range, it revealed some particularly interesting insights for Millennials and Gen Z investors. You know, for the majority of financial advisors in our audience, I suspect their client rosters are comprised of relatively few clients from these demographics, at least in the primary, you know, household relationships that they have, right? Because, you know, most of the high net worth and ultra high net worth clients that they're seeking are rich old guys, you know, that type of stuff, right? The average age of an advisor is 62. Most of them tend to have clients in that same kind of nexus there within 5 years or so. But this audience of Gen Z and Millennials is becoming particularly important for advisors and for the wealth management industry, right? It's the next wave coming. I mean, heck, Millennials are in their 30s now, right? They're buying homes, they're having kids, they're making real money. So, you know, and heck, you guys are Gen Z and you're running a multi-million-dollar firm already. So let's kick things off with a quick overview of why you think it's crucial for RIAs and financial advisors to get serious about these younger generations of investors.
Yeah, for sure. I mean, it starts with the numbers in the sense that like Millennials and Gen Z are going to be inheriting like $68 trillion over the next couple decades. And they act very different than their parents, right? We still have this fundamental belief that the advisor is not going to go away as a result of technology, that, you know, the traditional robo-advisors, personal financial management, is not going to replace the advisor. The relationship is still critical, but the relationship that Gen Z and Millennials expect to have with their advisor is vastly different than how the baby boomers before them had them. So I think that advisors that are specific to different types of clients are going to be pretty important.
Totally. I think it's something we do a lot at Vise is like try to look to the future, right? Like so much of our business is like, how do we think about what are the macro trends that are going on in this space? And you look at kind of like this like wave of personal investing, this idea of like the Robin Hoods, et cetera, of the world, that, obviously kind of taking the world by storm. And really like our orientation is like, we try to do these types of things often to understand like, what are the future generation of clients like wanting, what's most important to them. And I think it's important, like, RIAs like need to get serious about younger investors because I think that they're amassing capital faster, right? They're continuing to earn money. They're the largest and highest earning generation, but they only hold like 5% of the wealth in the US in today. So I think it's still the early innings, but it's the place where, if we get the things they care about right, and if advisors get those things right, hopefully by using Vise, like you kind of cement a big lead.
Yeah, the younger generation cares about personalization unlike any generation before it, right? It's because they've seen personalization in every part of their life in terms of how they pick up content, in terms of like, how they order their food, right? Personalization is like every part of their life, and technology enabled that, right? So they want personalization in their investments. They want to be able to invest in ESG-friendly companies. They want to be able to, invest in, the cool things they care about, right? And advisors need to be able to reflect that, and they need to be able to reflect it with a technology-driven approach.
That's really smart. I think it's a smart observation, and when you think about the market and your overall hypothesis, advisors aren't going away. They're not being disintermediated. The acquisition of Wealthfront by UBS sort of, suggests you all are right, which is great to see, especially for others like Blueleaf who've made the same bet as you all are making. It brings up an interesting question for me about how you founded the company. It's always a really interesting story. And in particular, I'm interested in the inflection point that sort of led you to do this, because most successful technology companies are founded both with an inflection and some sort of market need and some sort of technological inflection point. With Blueleaf, it was the crash of '08, and it exposed all these problems with accounts being everywhere and folks' lives had gotten complex. And then account data wasn't in a single place, and technology had just come online to make data consolidation possible with dynamic interfaces. So I'm wondering, what are those things that you saw, you and the rest of the Vise team on the technology front in particular, but also the market front, that made Vise possible?
Yeah, it's funny because both of us are from the Midwest. We've been best friends for like 10 years now, which is kind of crazy for us. But, in the Midwest, a lot of people rely on human financial advisors, right? Our parents both went through a financial advisor. It was someone they knew since they were like in the third grade. They had so much trust with this person. It was like they're a member of the family, right? And we saw that. And meanwhile, the narrative in Silicon Valley was technology was going to replace advisors, right? So when we first went out to like raise capital, investors said to us, and this is like probably 5 years ago at this point in time, like, hey, financial advisors aren't going to exist, right? They're going to be replaced by tech. And we're like, well, you haven't seen all these people in the Midwest that are, reliant on a financial advisor are never going to give up their financial advisor for anything, right? But those financial advisors are really struggling, right? Because they need to manage more and more clients, right? They need to react to all of the, changes in the market, the expectations around personalization, all these big trends that are starting to play to advisors needing to build a better service offering for their clients, but they don't really have the tools or technology, right? Silicon Valley had been focused on building tools either for retail, like robo-advisors, or building tools for like capital markets and for institutions. No one had thought about this massive market in the middle, which was the advisors.
Yeah, it's funny. I think that I think what we do with the Millennial Survey, it's an old habit. It's something that we did when we started the company, which is we started talking to clients. Instead of looking at the market narrative, we just spent time talking to our friends' parents, any clients we could talk to and say, hey, how are you managing your money? And either people weren't thinking about it or they had fully delegated it to a financial advisor. People weren't managing it themselves. They weren't really using a robo-advisor. Most people, finance is inherently so personal, wanted to either unpack this and talk through this with someone else, or they just didn't want to think about it, right? It's not, people want to think about their hobbies, their passions, not not their finances.
Yeah, and like the next big thing was advisors and just the industry as a whole was adopting technology in all kinds of different areas, right? So reporting tools, like tools like Adapar, Salesforce, and tools, other CRM platforms, right? Account aggregation tools, right? The advisors are adopting tools in all these different areas, but they haven't really adopted anything in investment management. Right, so we're like, well, there's this huge opportunity to build the tool that supports advisors with their investment management, which is arguably probably the most important part of their practice. And then if you go the level deeper, the majority of the industry had been in funds and managed products and coming from these large asset managers, but clients really wanted individual stocks, right? And I think Robinhood helped make way for stocks to become cool again. But when you think about it, clients understand an individual stock far better than they understand, a mutual fund or an ETF, and I think that's what they're looking for. And zero commission trading really made it possible to give them kind of direct exposure to securities.
Totally, I think that it's funny. Sequoia talks about this idea of really successful companies have what they call unique insights, and there's this kind of unique insight that a set of non-traditional founders would have. And I think for us, it was this realization that people really resonated with individual securities inside of portfolios, and they resonated with that idea of personalization. So if you think back to when we were talking to clients, so many people didn't want to think about their finance. And so much of an advisor's battle is not how do I create the most sophisticated portfolio possible? It's how do I get my client to care, right? How do I get them to spend more time with me? How do I get them to not dodge my calls? How do I get them to spend time on financial planning? That's the part of the job that I think is so under talked about, really, that advisors spend so much of their time on. And individual securities, I think, is the story that really, I think, helped advisors at least advisors that we work with, spend more time with our clients and get them to connect on their portfolios.
Yeah, I think the last point, which I think is an interesting one, is that I have had this belief, both of us have had this belief that, oftentimes when you come into an industry and you've had 20 years of experience in that industry, you're doing things the same way you've done it, maybe slightly better over the last 20 years. Whereas when you come in without any experience in the industry, but maybe a unique insight or two, you can create something with a brand new perspective, right? That will highly differentiated, that wasn't done before that same way. I think the two of us kind of had that, right? Because we weren't veterans of the financial services industry, we thought of a way to kind of do it better.
Totally. It just meant for our team we had to lean on a lot more financial services experience than we hired.
I had two recent guests on the show who kind of building on what you guys were just talking about, this kind of core thesis, right? One, we had Dan Egan from Betterment on, a behavioral finance guru there, and he made the point of sometimes we've been so comfortable doing things the way we've always done them, we don't think to innovate, right? And so that's exactly what you're talking about here. The industry has been comfortable, right? Because it works, right? It's been working, it's recurring revenue, so it's really easy to get comfortable in that zone. And as an advisor, just not innovate, but wake up one day and realize, oh my gosh, there's all this technology available to me. And the other one was Kieran Bowl from Price Metrics by McKinsey said on an earlier show, that the sweet spot for advisors is when things get complex for the client, right? And so you're mentioning that the changing dynamic of Gen Z and millennials, and that they're much more active with individual securities and things like crypto and so forth, that they're actually getting in there and getting their hands dirty early. That doesn't mean they won't need an advisor at some point in time, right? At some point in time, life's going to get complex. But to your point, guys, the appetite for individual securities is going to be high, right? Because that's how they're not investing on Robinhood with funds, right? They're not going, oh, you know what? I could buy this fund and that'll be awesome on Robinhood. No, they're dabbling in all these companies, right? They're seeing Tesla and whatever, Disney stock or whatever, because Disney Plus is blowing up or whatever. And I'm getting in on that type of stuff, right? So they're going to have some interest in individual securities. It's really fascinating. So I think the thesis is really strong.
It's funny because individual securities have this emotional, viscerally emotional response by a lot of clients. So we had this advisor that previously invested all of his clients into mutual funds, signed up for Vise, started investing their clients in individual securities, and his clients had companies like Pepsi or Disney in their portfolio, and the clients started drinking Pepsi over Coke. And they started watching and subscribing to Disney Plus over Netflix and some of the other services because they felt this emotional connection to the companies they were invested in, which, it just shows the job the advisor is doing, which is, not only bridging an emotional gap, but, creating some sense of connection to their client's portfolio.
Totally. That story reminds me of my friend who invested in AMC and has since been going to the AMC movie theater every week because he has to do his part as an investor. And so, I think there is a really meaningful connection. And I think as advisors, we should capitalize on where we see those things. It's really hard to get people excited about your trust structure and how to optimize the different tax IDs, or, even when you think about tax efficiency, although everyone loves paying less taxes, but it's, so much more fun to talk through companies you're invested in, and why. And I think that's a huge part of the Vise story is can we personalize that to people? And, at the core, get them more excited about the way that we manage money.
The other thing that you mentioned, I think that's really smart and is important to talk a little bit about is this idea of coming at something with fresh perspective. I'm a product person from way back, and I always think about this as beginner's mind, right? You have to approach things with a beginner's mind, and it's about being open to learning. And I think one of the keys to your success isn't just the beginner's mind, it's the research you did. You showed up and you actually got out of the building, talked to clients, really understood their perspective. This isn't a field of dreams situation. Oh, we just came up with some big idea. We went out and you talked to people and really learned and understood in a way that others didn't. So that new perspective with that research means you're on incredibly solid ground. So it's a great story.
Yeah, it was funny. It's we started this company when we were 15, 16, and every day after school we would spend 6 hours talking to financial advisors. It was just our daily routine. We just talk to financial advisors and we get more and more introductions. But when you start with the customer and then the client, the end client, you can learn so much about how to build for them and build for their problems.
Yeah, I think that benefited us the most is almost just trying to deconstruct the way both advisors and then end clients think, right? You can always make a compelling pitch of hey, this is why this portfolio is X% better, or this is why this portfolio is X% volatility. But I think our realization was we got some advice very early on, which is an advisor told, his advice he got from his former mentor is, in this industry, you can either manage the money or manage the people, and managing the people is a heck of a lot easier. And you kind of realize that's really what advisors spend their time on, managing people, clients, their expectations, those relationships. And that's really where we've kind of oriented.
It's really smart. And by the way, that's where most advisors excel, right? I've said on this show and other shows, I think the average person would be very surprised at how few financial advisors actually studied finance. Yeah. Right? Most of them don't have a finance degree, right? They got their start, especially most of the mature advisors got their start when they were stockbrokers, right? They've got great relationship and selling skills, right? The ones who are very successful. That's the only way you get to talk to somebody who has a lot of money and get them to believe in you, that you're the right solution for them. So I think you're spot on, right? Most of them are not going to be the ones who are constructing portfolios, right? They're going to be using some sort of tools or outside provider to do that for them. We spent a lot of time nerding out on why Vise, I guess, and why this type of stuff is so important, but we really haven't talked about how Vise works. So maybe now's the time to do that, right? Get the big suspense is there. How does Vise work in terms of constructing portfolio on the investment process?
Yeah, it's a great question. Maybe it's good to just take a level up and kind of do the what, which is kind of what is Vise? So basically what we've built is a software platform that gives financial advisors the technology and investment expertise that they need to create hyper customized portfolios for their clients with ease, with a goal of they can kind of input their clients' investment needs, their goals, as well as ESG exclusions, things they care about, things as an advisor I might care about as a part of my investment strategy or my CIO wants me to think about. And then out comes this fully tailored, personalized portfolio. And so the natural question is well, how do we do that? It's a pretty cool feat. I think that John brought up this idea of like, businesses start with technological innovations, right? I think that for us, it was this idea of being able to use technology within separately managed accounts. Really, it's impossible to do personalization at the level that we want to with commingled funds. And so kind of like separately managed accounts were something that have been available for a long time, but high commissions, lack of great custodian technology made it really challenging for a long time. And so I think that like as that changed, especially as commissions dropped to zero, obviously demand for separately managed account products have like skyrocketed. But I would say like the first innovation is just like we create every client their own account with their own independent portfolio that's automatically managed by Vise every day. And that itself is an innovation because then every account can make its own investment decisions based on that client's tax information and tax needs, based on that client's personal preferences, their volatility, rather than having a piece of a commingled product or a unified managed account. So I think that's like almost the foundation in which Vise is built on that we didn't realize we benefited from as much as we have. And then the natural question is like, well, can we use technology to automate portfolio construction in a way that's meaningful and do things like create value in taxless harvesting, create value in tax management, whether it's around like advisor workflows that advisors spend a lot of time on. So, when spending time with advisors, we realize model portfolios are great. You can set up 3 or 4 models, but when someone comes in and they got this Disney stock that they inherited 10 years ago, it blows up your model. You've got to sit down in Excel, you've got to figure out how you build around that, and those kind of like 5% of accounts, those long tail accounts, almost take up 70-75% of your time in portfolio management. And so I think a huge focus of ours was, how do we think about building products and technology to just automate those types of things? Can you lock Disney? And we're going to minimize the pairwise covariance of the portfolio and build around that Disney stock. Can you set a tax budget for a client that says, hey, I don't want to pay a ton of taxes this year as I transition? Can you onboard them onto the Vise platform, set a $50,000 max tax budget, and Vise handles that, works around it, creates losses before creating any sort of gains? Those types of things I think are really where we've oriented our time, and that I think are like pretty cool.
That is very cool.
Yeah, one of the things we talked about in our prior conversation was some of the updates that you made to Vise in terms of the way the AI and machine learning works, so that it'd be easier for advisors to understand and their clients to understand. It was maybe, I think you thought it was a little too much of a black box. And so that's really interesting, right? If you think about it, most people would on the surface think as much automation as possible, just let it go and do that. And sort of then I don't have to deal with it. So I'm curious if you could talk a little bit more about your approach to AI and machine learning, and how that works with your advisor customers, so that they can translate it to their clients. Like, I think that's a fascinating way to think about this kind of technology. So I'd love to hear your thoughts on that.
Yeah, I mean, it's funny because Runik's background as an AI researcher. Our first product was purely machine learning based, and we loved it. It was great. But the problem that advisors had was there wasn't an explainable investment methodology. So, from the beginning of the year, last year, we tried to figure out, how could we build some explainability around our investment methodology? So,
totally. I think that like as an advisor, it's hard, and even with clients, right? This gets back to the idea of like fully trusting a robo-advisor. It's hard to just like trust technology blindly. And I think the thing that we learned is, how do we effectively tell a story that's compelling both for advisors and their clients? And for that story to be compelling, it kind of needs to be evidence-backed. And so we kind of like almost, as we thought about how we construct portfolios, started from scratch and said, well, how do we build an evidence-backed way of constructing and managing portfolios backed with financial science? And kind of looked at all of the financial research, and you see that like, I think what is premier in the space today is kind of like factor-oriented investing. So we said that, and we said, okay, let's take that as the base, and let's try to explain what we do in the intelligent way that we construct and explain and create portfolios, but in a manner that a factor investor would fully understand. And that's really what we've oriented to today, where the future is, hey, like we still want to use machine learning to create customized investment advice, but let's do it in a way that it's a framework in which if I'm a factor investor, I can see this and say, oh, like this is Vise's edited version of the value factor, where they're using intelligence to account for things like intangible assets on the balance sheet to adjust book value. We're updating accounting standards that, as an aside note, has totally not kept up with technology and the pace of growth. And do that across different sets of factors. But at least as an advisor, when I then look at Vise's investment methodology and how we make decisions, I have a framework for how, what I'm familiar with to kind of evaluate on, rather than kind of having to go off this blind trust of like, I'm going to trust this machine learning system completely end to end. And now there's a lot more transparency and like we've seen a ton of excitement from our advisors around those types of things.
And I think excitement's a really important word here, and alignment too, right? You talked about how exciting investing in individual companies is. And in some ways that prior version didn't line up with that, right? It didn't tell the same story that you were hoping to tell. And now you've kind of aligned the technology with the overall value that leaves clients and advisors probably both pretty excited about what's going on. So that's really a fantastic tweak to technology.
Exactly, it's that, and we're also building out what we call portfolio intelligence, which is we understand that every advisor fundamentally has a story to tell their client, right? They need to give answers to all the questions their clients have. And we need to arm them with those talking points. We need to arm those with just the justifications, the storyline for them to be able to explain not only portfolios, but the underlying investments, right? And a lot of what Vise does is help the advisor tell a better story.
Yeah, and that's really interesting and different than what many advisors are used to. Like many advisors will hire a third-party investment manager, right? Portfolio manager for their managing client assets. But they will come to the clients and say, hey, we're going to be using this portfolio manager. This company or this individual has a great track record. Look at all the performance in the past, and it meets with your risk tolerance and so on and so forth. This is different. We're going to be building you a custom portfolio based on a whole bunch of variables that are important to you. That's a different conversation than many advisors have had in the past, right? And so to be able to tell the story of why this works, why it's important for you is so important, and to give them the confidence that, hey, yes, there's some really smart technology behind the scenes here, but at the end of the day, this is what it means. This is how it works. I think is key.
Totally, I think it's like a paradigm shift, right? It goes from like, how do we get credibility by association as an advisor? So I'm using BlackRock products, or I'm using Dimensional products, any one of these companies, right? Like, you have credibility via association. They have kind of fact sheets and materials that are kind of off the shelf that you can provide. And as an advisor, it's almost like your only option, right? And now there's kind of this shift of like, well, if you can provide customized investment advice to each person, instead of trusting a track record and people with a lot of experience, you're trusting technology. And to really get there in terms of ability to trust technology, you need to understand how we're making decisions. As well as like some advisors want to have their hands on the wheel a little bit. Like I think that the best way to describe kind of like how Vise manages a portfolio is like pretty similar to Tesla Autopilot, which is this idea that like, as an advisor, you can kind of have your hands on the wheel so that if you want to change things, you absolutely can. But that like Vise is kind of like automatically managing this portfolio on its behalf. And so I think that like that feeling of like I'm still in control as an advisor is also super important. Because not every advisor outsources. A lot of advisors spend a ton of their time insourcing, and most of them that we talk to would outsource more if they could. But it's hard to kind of get over that feeling of I'm not in control because I want to make the best decisions for my clients.
Yeah. I want to jump back to what you've learned when the survey you did, because there's some interesting things popped out there, and I think they're worth highlighting in more detail, and it kind of informs some of the things you're doing at Vise and why it's important. one of the things that jumped out to me as I read through the survey results was that younger Americans value and trust financial advisors more than any other source, but they seem to be hung up on the cost. Was one of the details in the survey there, and to me that was fascinating because the generations that came before them had a much higher investment expenses. I mean, when I got started working at Fidelity years and years ago, the early 2000s, the lowest trade or the entry level trading commission was $24.95 to trade stocks, right? So it's like people who are worried about costs today are like, hey, you don't remember the old days when it was really expensive and some of the load funds were like 5-6%, type of thing. It was kind of crazy back then, and one could argue that we had lower quality financial advice and options available back then and generations before me. Yet they embrace financial advice, right? They knew, the consumer embraced financial advice. So if the value connected with the result is connected to the result, why do you think that the cost of financial advice is brought up as a concern for the millennial and Gen Z audience that pop up in that survey?
I mean, you have to look at the rest of their life, right? Technology is driving democratization and everything. It's bringing prices down everywhere, right? And they're going to see it with their investments, right? No different than how Robinhood did it with zero commission trading. They're expecting to see it in terms of how they consume advice, in terms of the products they invest in, right? I think something that we're fundamentally doing at Vise when we think about kind of the long-term vision of the company is closing this thing called the financial access gap. Right? A lot of what was available to the super rich, the most sophisticated investors, should now be available to everyone, right? And technology should be the enabling factor to be able to do so.
Totally. I think that's almost the most important. There's this idea that you either don't have access to the most sophisticated advice or it's prohibitively expensive because it exists at institutions, because they have people that make these investment decisions. And I really think that's where that sentiment comes from, right? It's not that they want the 4 basis points, Vanguard ETF to be 2 basis points. It's that, you see these kind of sophisticated investment products, things like private credit, things like venture, things like all of these aspects. And they're either prohibitively expensive or as a millennial, you just don't have access to them. And I think this idea of how do we close that access? How do we level the playing field? Is a super important one. I think independent advisors are on that journey as well, right? So much of what they do is help the average person, right? Your average mass affluent individual get access to and make better investment decisions to help close that gap. And our goal is can we empower them to do that even better? Can we give them access to the best technology? Can we give them access to better products? All of these different things.
It's interesting. When we talked about the survey, it got me thinking about what you're just talking about. But there's one other area I think that's worth noting, and it goes back to this idea of being able to tell a clear, compelling story. And if the folks who are less connected with financial advisors are the ones most concerned with the price of financial advice, that might also indicate there's a bit of a marketing communications problem here, right? With the folks on the advisory side, and their ability to connect with millennials and Gen Z. I think that's always been an item that we've talked about as a challenge for these folks. So I think while it is the long-term, price reduction that we see, and that's not a new trend, right? This 40 years, you've seen the yield on assets to drop pretty significantly, but also, I think advisors do themselves a disservice not connecting with that potential client base more and being more clear about the value and the actual costs, because it's probably lower than most of those folks think.
Yeah, I think it's interesting because the type of advisor, kind of as we talked about before, the steak dinner and country clubs advisor, I don't think appeals to this audience anymore. Whereas, the new type of advisor, we've talked to an advisor that focuses just on LGBTQ clients, right? Or an advisor that focuses on musicians, right? And they play the guitar with their clients. They level with the concerns that specific type of client really faces, right? So there's going to be different types of advisors that now sprout up in the same age range as well. that are servicing specific types of clients. And I think that's going to be a meteoric shift in the industry.
Yeah, and John, I think you brought up a good point on just like the pitch needs to change, because most of these millennials that answer your survey, like they may not have spent a ton of time with advisors, right? So like the way that they're answering these questions are oriented around the reputation of financial advice. And it's almost as this reputation of like, oh, this is the thing that's for the super rich, that's super expensive. We probably wouldn't do that. We can't afford it. And I think that there like really needs to be kind of, I mean, maybe marketing is the wrong word, but kind of like storytelling at a macro level of like, no, this is available for everyone. There's so much that we do. Even like when we hire people, it's like, oh, so are we just, building products for the super wealthy? It's like, no, our average client account's a couple $100,000. Like, there is, the average person can have access to great financial advice. And I think that so much of that is like telling that story and getting that word out.
Well, and I think that story is also part of Vise's story, right? Like, I think it's technologies like yours that are actually enabling that shift that you see so many advisors running headlong toward, right? Get away from the country clubs and the stakes and talk about real value creation for clients that I like, I understand, and I can really add value to because of that understanding.
Yeah, exactly.
Especially with new asset classes like crypto. I think that's a perfect example. Like cryptocurrency is this thing like everybody's thinking about right now. We bring it up with like a lot of the advisors we talk to because like, we're trying to understand how this fits in and how these things kind of like play a role. And, some of the advisors we've talked to have kind of communicated it really well, which is like, look, it's kind of my job to answer these types of questions. But like, sometimes my clients are ahead of the curve for me. Like that doesn't happen often, right? Usually I'm the one in a position explaining to them how financial securities and products work. And obviously there's a debate on whether crypto is security, but, as a client, if you're a millennial, like you could potentially be ahead of the curve. This is something that you've spent more time with. And so there's, I think, definitely work to be done as well. And, stuff that Vise can probably do also to empower advisors, to have the answer to some of these questions. They don't even have to be, have the ability to invest in crypto, which I think is super interesting, but at the very least kind of have the answer, be the expert.
Yeah, it's funny. I saw this survey from CNBC, like 80% of financial advisors got questions from their clients last year about crypto. And only 14% of them like had the ability to either do anything about it or really talk about it.
Yeah. Well, it doesn't match with the model for many of the advisors who are in the independent broker dealer model or in the wirehouse, right? They're not talking about crypto as much. RIAs can because they have a little more flexibility. But for most, frankly, for most advisors, they make their money off managing independent, like stocks, bonds, mutual funds that are they can charge a fee for. It's in an account. So something that's outside of that becomes a little. I should be interested, but I'm not.
It's it's a self-education thing, right?
Totally.
So even if you're not, the modern advisor, the advisor that I think Samir and Runik are talking about, and the advisor that we see on our platform and that we're addressing with this show, for that matter, is interested in learning so that they can then educate their clients. And I think crypto is a tough one, which is why we did one of our early shows on it. Fantastic with Andre Soubiran, who was, really just a ninja in explaining crypto and particularly blockchain, which I think is the real block for most folks, in a way that humans can understand. And we've even created a download for folks. It's on social media about understanding blockchain and crypto and how to explain it to your clients. But it really is about self-educating and then educating your clients. It goes back to what you all were talking about in terms of telling a clear, clean, compelling story. It's how humans understand everything. And so to the extent that we can do that across the industry with everything that we do, the whole industry is going to be better off. Along those lines, one of the things in your survey that I thought was really interesting was around ESG. And it said that 50% of Americans are interested in sustainable investing. And that goes up a lot if you talk about millennials and Gen Z. So that's a pretty big shift. And I thought that that it's a big shift, not just to caring about ESG, but away from investment performance as the central focus of what I care about. And, how do you think, from your perspective, advisors should digest that information and think about it when they're thinking about putting together their offering?
I mean, clients not only want to, reflect their values in their portfolio and ESG, but they want to understand how that's kind of having an impact, right? I think a lot of what an advisor has to do is tell the story around how they're having an impact with their portfolio, right? How they're, realizing their values. And I think something we're trying to help do is help them quantify that impact, right? So, this portfolio is equivalent to, planting 100 trees a year, or, taking one less shower per day, or whatever it might be, right? Those little tidbits, those stories, help the client, really feel better about their portfolio.
Yeah, something I think we've observed is there's this disconnect between clients who I think find this pretty interesting and advisors who are kind of reactive in nature about some of this. There's definitely an ESG niche where there are advisors that are really focused on this. But in general, most advisors are oh yeah, that's that thing that's a pain for me that I have to figure out. And I don't know if it should feel that way. I think that so much of what we're trying to do at Vise is make ESG interesting from an investment management perspective. Can we help advisors understand the trade-offs of some of these exclusions from a returns perspective? Can we help them understand how do you set expectations? Obviously, ESG has had a killer year in the last couple of years, but everything reverts to the mean at some point. It's important to set expectations with clients and say, hey, if we do these set of things, this is what the tracking error could look like from a benchmark that's important, or this is what we should expect X% potentially in fewer annualized returns, and really help clients understand the trade-offs of the decisions that they're making. Because most advisors, I think the thing that they have reservations of is oh, that's that thing that everyone talks about, but there's no way that that stuff is going to make more money, or it's going to make enough money, and then my clients, they care about returns, they're going to be pissed at me. And so I think that really orienting around, look, advisors and clients make trade-offs together. They make portfolio decisions together, and your job as an advisor is to help clients make those decisions and show them kind of what the impacts of those look like, and being empowered to do that is super important.
I love it. We had Nick Cantrell and James Katz on an earlier episode talking about ESG investing, and James Katz is the founder of Humankind Investing, which is a fund that invests their ESG, and then Nick Cantrell is an advisor who runs Green Future Wealth Management, I think is what it's called. We'll get that linked up in the show notes. But a lot of the things that you're just talking about there really resonated. I know we only have a few minutes left together, but I wanted to hit on this, and I think that's a great segue. Is you guys are in the Gen Z generation, right? Really young, yet you're operating in a space that's people my age, right? I'm a Gen X, and then you get the Boomers, who are the most dominant segment at the moment in this industry. Yet you're crushing it, right? You're articulating things in a way that makes sense. What is some advice and guidance you can offer the old guys, right? How do you better communicate with millennials and Gen Z about these things? How do you kind of adapt your style a little bit so that it resonates a little bit better? Because you're right that heck, this even includes me. I live in a country club community, and I don't go to the country club and eat steaks. I don't want to go to the country club. I suck at golf. I'll play occasionally, but I really stink at it. That wouldn't resonate with me. So what are your thoughts there on helping the older advisors better engage with the younger audience?
I think it's curiosity, right? If you're an older advisor, and I spent a lot of time with older advisors, they tend to be very stubborn, right? This is the way I've done it for the last 20 years. Right? This is how I do it. This is the right answer. This is the wrong answer. Right? But I think when you take this curiosity-driven approach, when you're asking a lot of really great questions, both to the end client about what they're interested in, and taking the time to really learn about it, right? Rather than taking that stubborn approach, I think you will, inherently build a better relationship with that group.
Totally. I think it starts with TikTok. I don't think as an advisor you have to be on TikTok, but I think that it's just orienting around, I think personalization is so incredibly important. Investing in what you care about, right? Investing in your values, those types of things matter, right? Like the reason why people are buying into individual securities is because they resonate with those companies and they want to own a piece of those companies. And I think just like really thinking about maturing your offering as an advisor to include some of those things is super important. And then at the very least, like, to Samir's point, having curiosity, especially about like new technology, because this generation definitely does, right? They've like grown up in a world where technology is at their fingertips, and so they're deeply curious about any new tech, and they're generally more open to it. And so I think having that same perspective, to Samir's point, where you can say, hey, crypto, this is something that's really interesting. I'm going to go look into this, even if I'm not going to invest all my clients' money in it. Like, at the very least, I want to be able to have sophisticated, reasonable answers to my clients' questions, and do that across everything.
Oh, that's perfect. I really love it. This is fantastic. Both of you, the curiosity and the I was thinking of it, the way I translated it in my mind is be less rigid. I was laughing when you said TikTok, because I've got a 17-year-old and I've got a 13-year-old. 13-year-old wants nothing to do with social media yet. Thankfully, she doesn't want anything to do with social just yet.
Great.
But my son is all over it. And what's really fascinating is like, John and I can attest, we're some of the early adopters of social media in business. Like we were there at the forefront when Twitter and Facebook and so forth became things that, grown-ups used. And to see the way kids use it, it's just like, wow, you guys are so much quicker and you discover things differently, you have different opinions. And so to like remove some of your rigidity is really a great way of doing it. This has been fantastic. Samir, Runik, I'm sure the folks who are listening and or watching this episode are going to want to follow up with you. What's the best way for them to get in touch?
Come to the website, vise.com, and if you're an advisor, request a demo, or if you want to reach out to us directly, you can either email Runik and I at just samir@vise.com or runik@vise.com.
Yeah, totally. I think the other thing is we've got a lot of resources, like, maybe as an advisor, you're not looking to like change up your entire practice right now. You're not looking to like, get a new platform. Like, so much of what we try to do is kind of getting back to that point of like provide resources and insights on some of these key things like crypto, like ESG, where we've kind of from our technology lens, have seen the markets and how we've thought about that. And we've got a lot of those resources too. We've got webinars that happen on how to approach millennials and effectively go after them. We've got webinars on crypto. We've got blog posts. So just like, check out the website. There's all sorts of cool stuff.
That's fantastic.
I think it's great. And I think you just gave me an idea for a joint webinar about how to add this kind of technology to your existing stack, right? It's not a wholesale jump. You can mix it in and you can move there over time. And
totally.
I think there's another story to tell there.
Fantastic. Well, hey, we'll talk about that offline. Well, thanks, guys. Really appreciate you coming on the show.
Thank you so much for having us.
Thanks so much, Mike and John.
It was great.
Hey.
We had a blast.
All right. See you guys.
Bye. Yes.
Thank you very much for listening to and or watching this episode of the Augmented Advisor Podcast. It was fantastic to have you with us. I hope you enjoyed the conversation as much as we did. Huge thanks to Runik and Samir from Vise for joining us and helping us get smarter about the future of financial advisory clients and the tech we will be using to serve them. Fantastic stuff, guys. As I mentioned at the top of the show, please make sure you subscribe to the podcast on your favorite podcast platform, and do us a favor, make sure you give the Blue Leaf page a follow on LinkedIn. We share every episode of the show on LinkedIn, along with lots of snippets and insights that come about from the show. Love to have you be a part of the community, so hook us up. Click the follow button. It's awesome. You're going to love it. Okay, that's it for today. Please make sure you're staying safe and be nice to each other. We'll see you next week on the Augmented Advisor Podcast. See ya. Bye.